Hey traders, Raghi here, and in this premium video, let's recap the importance of understanding caution days. It's so important that we understand that there are certain days that are simply going to be better for trading. And I'm not trying to tell folks that, don't trade on certain days, but you know me, I'm going to tell you guys straight up. I'm going to be as straightforward with you guys as possible because anything else is wasting your time. And I want you guys to be great at this game of trading. And it is a game. And just like any game, there's certain weather that's better for golf. That's better for tennis. That's better for football, right? Same thing here. What's the weather like? And for us, caution flags. This is going to be rough weather, right? Non-farm payroll, FOMC minutes, meeting, chairman events, even Clarida lately, when you have different members on CNBC, they're going to create sometimes volatility, chaos, uncertainty, anticipation into the event. End of month, end of quarter, the options expirations. I mean, these are our caution flags, right? Okay, so what do I do? Well, I think number one is a very reasonable conversation. My partner here in the office who works on the Simpler Future site, in the background, you guys don't know her, but she'll always remind me. She'll say, hey, Rob, you don't have to trade. Flat is a position, right? And she's reminding me of my own stuff, right? Flat is a position. And you have to ask yourself, some folks, what is going to elicit your worst behavior? I'm going to get a little psychological on you guys here. Okay, what is going to elicit your worst behavior? And I think I probably spelled elicit wrong, but you guys know where I'm going with this. What is going to elicit your worst self, your worst behavior? For some traders, it's missing a trade. Missing a trade is going to trigger that FOMO that they can't control. And then what happens after that? It's like someone else took over. For other traders, it's taking heat. It's taking that unrealized loss that then, gets them like a deer in a headlight and gets them focused only on that one bad trade in their book, and they can't do anything else. They're almost paralyzed and just, they get target fixation on that one trade. So you got to ask yourself, which is worse? For me, I'm probably closer personally to the taking heat thing. I have to tell you, after trading Forex for 20 years, I am so okay with missing trades. After trading futures for almost 30 years, I am so okay with missing trades because there's no possible way with the varied hours and the expanded hours of futures and Forex trading that I'm going to be able to watch everything to the degree that I can catch all the moves that are potentially out there. So possibly, I should be grateful, being a futures and Forex trader really got me okay with this. I am 100% okay with this. And I really actually wish most people that. Be okay with missing trades. It's going to happen. And check that FOMO part of you. But it's very hard to change our wiring. So rather than saying, well, Rog, I wish I was more that way, but taking heat is really something that really bothers me, well, then you've got to be okay with missing a trade. All right? So ask yourself what your issue is. It doesn't matter what mine is, but ask yourself what your issue is and just work around it, compensate for it. Okay. So I'll trade smaller size, I'll trade using options, or I'll trade only from conservative levels. Well, today we had non-farm payroll. And any jobs number right now, gang, in this environment of the coronavirus and the impact on employment, any one of these jobs numbers is going to be a major event. And lately, it's been an event where we see a rally. And I've only been somewhat mockingly saying, great, more Americans are out of work, and so the market must rally. I'm saying that completely sarcastically and somewhat maybe disgusted because there's a lot of folks out of work. It's tough for a lot of folks right now, and yet the disconnect of the stock market and the economy and the economic realities for a lot of folks in the U.S., around the world, but in the U.S., I mean, it couldn't be a wider distance. Someone even joked and said that the stock market is social distancing from the economy, and I thought, my gosh, how well put. The stock market is right now social distancing from the economy. They are not on the same reality plane, okay? So I'm going to be more cautious. One thing I have to say, and we talked about this in the morning a bit in terms of, I even saw the chatter in the morning, which I was so pleased. A lot of you looked at the currency lineup and said, wait a minute, Rog, this is risk appetite. This is not risk aversion. This is not strong, yen. This is weak yen, and it's strong calm dollars. The currency market, the largest market in the world, is telling us there's risk appetite. And you know what? They were mostly right, weren't they? What else was indicating risk appetite, aka strong stocks? The VIX. The VIX was mostly weak throughout the day. I mean, it had some moments where it moved higher, but for the most part, down, 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 down. It even breached to the downside, indicating expectation for weakness. We saw crude move higher throughout the day, and that is typically fairly bullish. I mean, we had some volatility, right? Clearly we had some volatility, right, early on. This looked a lot like the Russell, didn't it? This looks a lot like the Russell. Go check your Russell chart. Pause this video for a moment if you'd like, and go check out the Russell chart. You'll say, wow, this looks a lot like the Russell. The Russell and crude are very sensitive to each other, and I believe the bond, not the only one, but the bond is the KRE ETF or regional banks. So Russell is pretty sensitive to crude, and they look a lot alike. They both look like they wanted to head lower, and overall they headed higher. All right, so then what else was indicating risk appetite? Buy equities. Look at the weakness in bonds. Okay, so there was plenty of reason to do nothing, but if you were going to do something, and you were going to do something from conservative levels, it was or with options, it was going to be an equities buy. It was going to be a series of setups or trades that were risk appetite, short bonds, short VIX, long crude, short yen, long Aussie, etc. Right? So I'm still not going to sort of somewhat abandon the barometer on a caution flag day, a caution flag session. We're still going to rely on them, but if you are going to venture in, enter from only conservative levels. Trade smaller size. Use the underlying option instead of the micro or mini. That way you can control risk. You can control your exposure. You know, the worst case scenario in a highly volatile, potentially day. All right, so that's that. And you'll notice I was very quiet today, and that wasn't because it's Friday. It was because it's a caution day Friday. Now, Fridays are typically going to be days that I don't want to be too active. So one question I get a lot of is, Rog, what are your favorite days to trade? And I can tell you pretty easily. It's Tuesday, Wednesdays, and Thursdays. So if someone said, Rog, I've got 3 days a week that I can trade. What are the days of the week that I want to be looking at the market? I'll tell you, it's Tuesday, Wednesday, and Thursday. Now, are there exceptions? Of course, right? What's my next favorite, or my second to least favorite? Monday, followed by Friday. So this is number one. And then additionally, think about also time. What's my favorite time to trade? About 7 a.m. to about noon, 11:30. That's my favorite time to be trading. Absolutely. What's my second favorite time? About 8:30, 9:30 to about 11:30. That's PM. So the Asian session. My least favorite is typically going to be anything after lunch, but most especially the last couple hours a day. I'm usually not interested at all in the second half of the day for day trading. Now this is specific to day trading, right? Because picking the day of the week for end of day trading really doesn't make a lot of sense. I mean, end of day, daily time frame trades are just going to trigger when they do. But I'm specifically talking about day trading, right? What are my favorite day trading days? And for those of you that joined me this week, saw the alerts, maybe you weren't in the chat room, you saw we slayed this week. Why? We focused on the 1-minute charts. We did not distract ourselves. We had good clarity, not great. Those weren't easy days, but we were patient and we worked the conservative levels and we scaled in, agro, moderate, conservative. And I think you see the fruit that it bore, right? So these are, I know I've gone on for about 9 minutes here, but if you don't get this stuff right, it doesn't matter that I had a breach retreat, or it doesn't matter that I've given you HPMRs. It doesn't matter what the V-score is, right? If you've got an overall bullish bias day and the market's heading up towards resistance of the HPMR or resistance of the V-score, that's really not that interesting to you. It should not be that interesting to you. If the overall market, our market barometer, is bullish, it's the bottom of the range you should be focusing on. Not, well, I've got the V-score. Now, yeah, I mean, a few times it looks like it did okay. But what would I tell you to really favor? to be a buyer in the S&P between a -1 V-score and the mean, right? The overall bias is mildly bullish. Actually, it was pretty bullish. So that means that even when we have a caution day, I'm still going to have a bias. In fact, I'm going to go out on a limb here and say this. If you don't have a bias, a directional bias, you shouldn't be trading, period. For that day, you shouldn't be trading that session at all. If you do not have a directional bias, just say, you know what, I'll wait till I have directional bias. I'll wait till I have that clarity. I'll wait till I have that confidence. And until that happens, you don't really want to be committing your hard-earned dollars, your capital, into the market. I mean, and I think if in the beginning you keep directional bias as a reason to not take trades, if you keep directional bias as a filter to prevent yourself from doing anything, just in the beginning, maybe you do it for 30 to 90 days. Humor me. You're going to find the kind of clarity that you need. So let's take a look at the NASDAQ. Directional bullish bias, this is the strongest of the 4 indices. And we have a bullish day. If we sink down into the support of, and by the way, this was the way this looked, because you'll notice, let me show you something here. At 1 o'clock, which was right there, we actually put our high in right with the open. Now, if you could mark that high, this is where I'll tell you this was, in fact, and these are dynamic. Sometimes I tell you don't go back in time and look at the HPMRs, but this was, in fact, where the HPMR was on the NASDAQ at that time of day. And if you're thinking, well, Rocky said I should trade with directional bias, and I've got it, and I'm in the HPMR, is that a buy? It sure ain't a short, right? It sure ain't a short. Same thing with this back in here. Let's go back here. Here's 9 o'clock. Our high was put in at 9. Was this low the low that we saw at that time of day? It was. It was. As soon as this high is put in up here, this low automatically projects. So again, if you know there's overall bullish bias, what did a lot of traders do? They probably got aggressively short, right? And you'll see that the traders who waited for the clearing got the confirmation of the bullishness that the currency lineup, the market barometer was telling us. There's your HPMR buy. So I hope this breakdown makes sense. You really want directional bias because then you know exactly what you were waiting for. HPMR buys, not HPMR shorts. And you might say, but Rob, that high looks really good. Please remember that wasn't an HPMR high. That only got plotted, this right here, this resistance range in here. Okay, that only got plotted once we put in the low. Okay, so realize that did not exist at the time. And you'll be able to pick these up better the more you look at these HPMRs, because the high plots the low, high minus the average to high HPMR, and the low plots the high. And trust me, you'll get the hang of it, okay? All right, gang, so that's really what I wanted to share with you all. Now, I know one question that's probably on everybody's mind is, what the heck with live cattle? I covered live cattle in yesterday's video. I talked about it a little bit today in the room as well, but I still am in live cattle, gang. But I will tell you, and let me spend a few minutes really tearing this apart. I've had 14 trades this week, including the day trades. No, actually, close to 16. This is, and 10 of those were day trades that you guys went along. 3 of those were what? Bonds, beans, and bond, bean, copper, and this, and gold. So this is the one that's given me the most grief, right? And wouldn't you know, this is the one that I'm spending the most time dissecting and picking apart. I don't sit around looking at my winners. That's my job. That's our job. When you have a loser, your mind is open. Your synapses are going to fire in a completely different way. Your brain is ready to rewire itself because trauma, unfortunately, teaches. So use the trauma to your advantage so you don't have to do it much. Pick apart your losers. Do I still think this market is heading down? Absolutely. What could I have done better, right? I don't regret the short, but I do regret the location and the timing. Where could I have done this better? Well, knowing that we're reopening and knowing that cattle is probably tethered to a little bit of the, the meat plants being reopened and all that kind of stuff, this was probably going to move a little bit with that hog trade and the uncertainty about whether or not the government will mandate that the plants are open and so forth. I probably should have said no. Now, that's the first thing I'll say. The second thing is if I wasn't going to say no, I probably should have waited for the -1 V-score saying there's going to be a little bit more volatility and it could get us up towards that level. So if anything, I should have waited for a higher high. I should have really looked predominantly at a 94.90 entry, not anything in here. That was number one. I was too aggro, even too moderate. I should have been conservative or very conservative, right? This is the stuff that I think through, gang. So do I like the short? I think the short is a good trade, but I should have really been far more conservative, used the V-score, used that this area here, this value area high for the month of May. I should have used that more, right? So let my picking apart this trade teach you, hey, Rog, this is in the news. It's kind of tethered to the meat story. The meat story is volatile. Let's ignore this, or either we just be far more conservative about the trade, the location, and or focusing only on puts. So we can take the volatilities, the sort of elasticity that we're possibly going to see at the resistance level. So I hope that helps. I think that when I am taking heat, it's really important that I bring that front and center and really emphasize why, when, what I could have done better. Now, copper's another market. Is copper a little bit beyond my entry? But yeah, this one isn't anywhere near giving us any trouble. Okay, so for those of you that are wondering, yeah, we hit 2.43. We have a 2.3950 entry. As long as we stay below the -1 V-score, I'm pretty content. Copper's going to move higher with the equities markets. And so this, even though we're taking a little bit of heat, it's absolutely within allowable parameters. Okay? All right, gang, that's it for today's premium video, and I'll see you next week.